Holy Hakalugi, Batman. It is Friday at the lunch hour, and running late as always, but that's really nothing new for us. Rob Morales, RCO Network, coming at you live here at Studio 110, Phoenix, Arizona. With me, as always, the wonderful, the outstanding, the maleficent, I don't know, whatever, Sacramento Satoshi, also known as Henry, my brother. Hello. Just in case you don't know. What is that? Yeah,
we're actually on early.
No, we are. Are we? No, we usually get on at noon. It's like 12. I don't know. We're on for about half an hour. So if you want to chime in, if you want to drop in those comments. Oh, this dropped out quickly. If you want to drop in those comments, those hearts, those whatever you want to engage with us, to know a little bit more about your money, your finances, that's what we're here to talk about. So Satoshi, aka Henry, I know we kind of talked about that. I lost my virginity, sir. I finally did it. I lost my crypto virginity. Can you believe it?
Finally.
You crack the egg enough, you hit the top, eventually it's going to all come apart. You know what I mean? So, when you see these large swings and these percentage gains in something that's even speculative like Bitcoin, some people don't think it's speculative, Bitcoin institutionalists, you cave in. Screw it. I'm going to go in. And so I did. So the plan was I had a plan, Henry, Satoshi, whatever. My plan was to, we were purchasing a house. So I had to acquisition that. I had to kind of put some money aside for that. And after the house purchase, I was going to move forward and open a WeBull account. And that's where I'm at now. I opened up a WeBull account because they trade cryptos. I was trading predominantly off my Vanguard. And Vanguard is kind of an old school kind of, I wouldn't even really call it a trading platform. It's more of like an investing platform. And they weren't really designed for trading. So I moved over. I moved a little bit money over for Webull just to start the account, just to let you know. I moved over like $500. And I actually really like Webull. Have you been on there? Because you use Robinhood, right?
I don't know Webull. I have... So my trading platform, crypto stuff is like Robinhood, Coinbase, Celsius.
Yeah. So I'm gonna go to Webull just to kind of show. And I was using TradingView because I was cheap, and it's an internet platform which you can kind of follow stocks and look at things. You can look at cryptos, but with Webull account, they offer you a little bit more expansive information, which is what I like, and you can use a lot more indicators and stuff. In this process of trying to learn more, I want more information, but sometimes I think too much information is a little bit overwhelming, right?
Can be. At first I thought is that TradingView? Because that looks...
It's a lot similar, yeah. I mean, it's just got... This is Webull.
Okay.
And so I opened up here. I'll change my portfolio. So my positions currently, with the Webull account, they give you free, stocks. So I did not buy ADT, and I have no idea what OPK is, but I got them free just by opening an account. And I think you do that with Robinhood too. But because you, Satoshi, were like, hey, you should put your money into I think Solana, right?
Mm-hmm.
So I went over
looking to buy, but.
So I went YOLO, and I said, okay, screw it. It's only $500 to me. $500 to me really isn't significant. It was just, like I said, to start the account. And I threw as much into Solana as I could without really, I looked at the chart a little bit. So, I mean, I did look at the chart, and saw it was down, I kind of looking at the Bollinger Bands. Henry was the one that told me about the Bollinger Bands. And I saw it was kind of on a downtrend. And so I said, screw it. I'm just going to throw in as much as I can in Solana. And then I ended up buying a little bit of Bitcoin and a little bit of Ethereum. So was that a smart move, Henry?
Yeah. Well, so crypto over the last 2 weeks was kind of weak. So you took advantage of the dip, which is kind of what I like to do. I like to wait and be patient, wait for dips to come down, and then buy the things that I wanted to buy, but they were so expensive. Now as far as this cycle, just remember you're kind of coming in like 2/3 of the way through. So there's been a lot of gains been made already, but just overall, just remember that we're very, very early in the crypto S curve. So
yeah, you're basically talking a foreign language, sir.
That means that so crypto is going to take 5 to 10 years to really bloom and develop, and it's still very early. So just think of it as a software program, but the software program is easy. Most of the people that are buying it, they're just buying it for the store of value. So they're just buying it to, like, let's say you have some money and you have cash laying around and you like, what do I do with this cash? Because remember, with inflation, your cash is decreasing in value. So what am I going to do with this thing that's decreasing in value? What could and then you look at stuff to buy and everything's expensive. So basically that's what crypto, I'm getting off on a tangent, but
I know.
that's basically what you're using it for. You're using it for store of value. But eventually at some point it will be like a financial tool. Like it'll be the next generation of the internet, if you can think of it that way.
Yeah. And so like, I know for myself, and this is not something that people should normally do. I know for myself, if I don't do it, if I hesitate too long, I'm never going to do it. So part of the reason, and I guess the first step that I took in this process was just to go blindly and just throw a couple $100 in there and just kind of throw it at something, is because I needed to get over the hump, and say, hey, you know what, this, go in there. And that's not something people normally should do. And at least I don't recommend. But we're not financial planners. We're just, two guys on Facebook, YouTube, and all that stuff, just talking about this stuff. But I hesitated for a long time because, again, you hear so many rumors about it. It's all speculative. It's really not based upon anything. Like for me, gold, it's like tangible. I can touch it, right? I can go buy a ring. I can go buy gold and then sell it. And I see that there's some sort of paper connected to it, which is these stocks. And when I feel like I'm trading gold, I feel like I'm actually trading the asset, which, that's a whole other discussion too. So it feels real to me. When you talk about Bitcoin, it's like, well, what the hell is it? It's like a digital coin. Okay, so what does that mean? It's this digital something in the ether. And as the discussion kind of moves from like our universe to now the metaverse, it's going to become, I feel, more real, more tangible in the fact that that's kind of the way our culture is going. We're not really connected that way anymore. We're not like going to like networking events. We're not going to like group meetings anymore. We're all meeting online, and we create these little fake universes, and all engage in that. We can create an avatar and pretend or be somebody we're not, aside from who we are in real person. And I do believe Bitcoin is going to be part of that whole transition. The monetary part of that. We're not going to sell. We can't buy things in dollars. Well, I guess we could online, but as we move into this metaverse kind of culture, I think Bitcoin is going to be more prevalent, and that's every indication, even what we've talked about too.
Well, you had a lot of different ideas there. So,
I was just going off on a tangent too. but
I mean, I guess you're saying, okay, it doesn't feel real, and that's because it's still early. So, like for example, think of like the smart contract platform coins. Like so that you're thinking. So that's Ethereum, Solana. There's a lot of different names. They're going to be. Right now it's just a coin and people are buying it because it's, I guess you could say, they're speculating that in the future, and I really believe in the future that they will be used as a rail to do different kinds of things. So one of them will be like, for example, finance. 30 to 40% of all jobs revolve around a middleman of some sort. So I want to do a transaction with you and I got to go through this other guy. And of course he wants to take a percentage. The future will be, I deal directly with you. And how do you do that in a trustworthy fashion? How do I have a house, you've been to my house, you want to buy it, and I want to sell it to you. And the best way would be to do it directly. So crypto offers a pathway. It offers a different rail, or you can call it like another system that you will be able to use, so that I can directly transact with you, and I don't have to go pay 6% to somebody else. Or and that's just the way that the future is going. People rather directly interact with other people than have to use middlemen.
Well, yeah, and we talk about
one example. So until that network or that thing is created, you don't really see that. You just see, well, it's just a coin, and I don't know, it's like not real. But it's basically, it's like I was saying before, it's just a program that it's just like Microsoft or any other company that produces software. it will be used for other things in the future. And the best example I could is like the internet. It's like the internet just transformed everything. Digitally, like you're saying, the metaverse is just another evolution of that. But just think of like before the internet, how things were different than it is now. That's what crypto will do, and we don't really grasp like all the implications of it. But that's why we're getting in early, so that we can reap the benefits later.
Yeah. Did you ever watch that movie Wall-E?
Wall-E, it's been a while.
Yeah,
the cartoon.
Yeah, the cartoon, the Disney one.
Okay.
If you need to buy Disney stock, we can talk about that too. But no, I remember watching that, and I see that kind of in our future in a certain respect. We're just kind of all encompassed in this 2x2 foot like space, but we have so far of a reach just based on whatever platform we're on. Social media, Amazon is that kind of avenue, and then now the metaverse kind of whatever manifests out of that. And then the thing I worry about is we're going to be all overweight and looking at TV screens our whole life, but that's a whole other thing.
I don't believe so. I think technology will allow you to. Healthcare is going to genetics, so genetics is going to revolutionize healthcare, and we'll be able to cure obesity by using genetics. But anyway.
Yeah, changing a gene. I know we talked about that. Where you don't gain weight anymore, and that's really kind of one of those. Okay. So yes, we're going off on a tangent. So I do recognize that it's kind of going that way because the iBuyer programs. So I'm in a real estate, and one of those programs you got Open Door, you got Zillow, OfferPad. A lot of that iBuyer was kind of talking about or addressing some of the things that you were talking about, that one-on-one interaction, kind of cutting out the middleman, or at least making that middleman less important, and again, having more of that direct impact. But we do see the fallout of that. I mean, Zillow in itself, decided to pull back from that market, for their own infrastructure, because there's still that tangible part of it. There's still a house that you have to repair. There's still,
I think Zillow might have overpaid or something. They lost.
They did.
I think it was in your neck of the woods, Arizona. They paid too much money and lost. So that's what cut back. But I think Open Door is still doing it, right?
Yeah. Open Door is still in the business because they had a stronger infrastructure before. But the algorithms and the things that I think the computer systems tried to emulate between the house purchase and the potential gain were just all off. I believe that they were offering, way more than what the house was worth, and people were taking advantage of it. Shit, I had a client that I told to take advantage of that, in a particular situation, and they relisted the house and it's still on market like 2 months later, which is crazy. So they far missed what the potential gain was, from going from those programs. But, that I think the thing we're trying to talk about is we're recognizing the momentum forward. Bitcoin, cryptocurrency is that momentum forward, at least the onset of that. And I believe there is a tremendous market for Bitcoin because a lot of the institutional people haven't really bought in. Older people, where all the money is sitting, hasn't really moved there because, again, I think they see as more speculative than really it is a tangible asset. So there's a potential for growth. The other part I like about crypto is like I can't afford one Bitcoin. And when I went to go and like I said, I took $500, put it in a WeBull account, and said, screw it, I'm just going to YOLO and just put it wherever. You told me Solana, so I bought like as much as I could of Solana. But then I had like $50 left over, and I decided to buy Bitcoin.
I'll have to stop you when I hear certain things because then it gets too many topics. But I told you that I wanted to buy Solana, but that's because I shared with you my. Just my general theme is that Bitcoin should be the biggest.
Yep.
So it should be 50 to 60%. If you now this is going like, okay, now you have a 401k and you're investing your money in your dollar cost averaging. Okay, you're doing that first.
Yeah.
Right. We're just talking about, okay, I have a little extra money in my bank account. I got $5,000 or $10,000, whatever you have, and it's just sitting there. Maybe I want to play around and people are making money and I want to. So this is just the fun stuff, right?
Yeah. Yeah. For me, yes.
And so I think the first thing in my mind when I'm thinking, okay, I want to get into crypto, you got to start with Bitcoin. You want to because that's the biggest and the most stable. Okay, and And so you have to have that. I say go for like 50 to 60% of your money, or even 70%. I mean, Bitcoin, again, is a store of value and it's fixed. Okay. Yeah. And we're not going anywhere with money printing. Money printing is going to continue. Okay. So just mathematically, if you have something that's fixed and then thing that you're comparing it to, which is dollars, if the government keeps printing more and more and more and creating more of that, yeah, those dollars are going to be more in relation to the fixed asset. So mathematically, the fixed asset will increase you. That's just plain and simple. Okay, so you can start with, so I would recommend Bitcoin. And then once you get Bitcoin and you start getting a good amount, then you start thinking, well, what about this Ethereum? And then you can start looking into, I know I'm going on and on, but I'm just kind of showing you the way I think. Okay, you want to go with Bitcoin first, and then also, so you want to think like the smart contract platform is a $700 trillion market. It's finance, insurance, all those kind of things. So, but there's a lot of regulation, like you see with that's the risk with that is like, can the government slow it down so that it takes 10 years instead of 5 years? That is possible. So then you can start looking into Ethereum. I think Ethereum is the biggest by market cap. I think I forgot the numbers, but it has a large market share. It's number 2 compared to Bitcoin. Well, so that's where I would go next. And then also you could dabble into Solana. I think Ethereum is number 1. And for me, Solana is a really close second, actually. But see, my percentages, I have like 60% Bitcoin. I have like 30% Ethereum, and then like only 10% Solana. So I want to get my Solana up. So that's why I'm saying, that's why I'm looking at that and buying it. That's good that you jumped in. I like that.
I took the initiative. So, hi Virginia. She just joined us on there and made a comment. But
hi Virginia.
So I needed to break the back, right? And get over the hesitation of getting in there. And so what I did personally, and again, this is not financial advice, I put my money into a WeBull account and started that process just to kind of see. I want to say about a year ago, I started investing more and started trying to understand that. If there was any word of advice to do, is to start earlier than later in life. So if there's any classes or ways to learn, or just be on the show, ways to trade early on in life, I think you have a lot more to gain later on as far as financially goes. Don't start when you're 40. I think this is what the learning lesson is. But start when you can, or start when you have a little extra you can do. But again, like what I was going back to with Bitcoin is I like the fact that I could invest 0.0019. You can see that's what I invested. 0.0019
that was your big,
Bitcoin.
That was your big thing, is like, I don't have enough for a Bitcoin. And it's like, okay.
Well, again, thinking in terms of shares, it's like I don't have enough to purchase one share. But, WeBull, again, allows you to purchase a very small amount, whatever you can afford, and which is also dangerous, too, because then you get these people who are YOLO that really need that 500 and they just throw it into like a Bitcoin. And then the hesitation I had this week was the day I did that, the market started dipping down. In Bitcoin and crypto, and I'm like, and then again the thoughts in your mind start creeping in. I'm like, did I make a mistake? And then I'm like, okay, well, it's only $500.
You decided to buy that day, huh? So we'll go through why you decided to buy at that point.
Because I was hesitating too long to get into it. I just kept thinking about it. I need to do this. I need to do this. And I said, screw it.
You made an emotional mistake.
Just getting in. Just starting.
You felt FOMO. So what happens is when things run up and get expensive, people feel like, oh man, I missed out. I need to get some, and so they tend to. And it's not, and you're kind of new to getting into, so that's okay. But a lot of times, what I try to do is find the things that you want to buy and then wait for the dips.
Yeah.
Or you could, or just wait, don't put all your money in at one time. Like I told you about the layering in, put some money in, and in case it goes down, then you can buy it again. Or if you know somebody like me, you ask me like, when I told you, like, it's probably going to go to like 56,300.
Yeah. I think it was
56,001. I don't know what the bottom was, but it did go there. So that would have been a good point. I bought some for our mom around 57. So.
No, and what I mean by getting into it is like I was hesitating. Like, okay, so I had this plan. Is like, well, when are you going to execute this plan? And it was top of mind that day. It wasn't because I felt pressured or putting pressure on myself to get in it or buy Bitcoin. It was more like, okay, I'm hesitating. Why am I hesitating? Just open the stupid account. So I opened the account. Okay, so you have the money in there. Just put it in, and not worry so much. And again, with an amount that's doable. And doable means that, if I went to Vegas and lost $500, it's not going to put me in a position where I'm like, oh my God, how am I going to pay my rent this month or whatever. So it was just a small amount to, play with, that I felt comfortable with. And I mean, I'm going to add more as time goes, and then play with the market a little bit to kind of see where things go, because crypto is a little bit different than normal stocks. And it's not something that a novice should just throw in and go YOLO like that. So do not do what I did, but at least take the initiative to start it, at least start understanding it. I think that's really the takeaway that I'm trying to share today.
Or another option too is most people don't have the time to look at the chart and try to figure out what's a good price. So you can, like we've talked about before, just dollar cost average. Just you could say every month I want to put $100 into Bitcoin, and in 1 year that'll be $1,200, and see. I mean, if you're kind of scared and you don't know where's the price going, but you want to save your money, or you can. I mean, well, I don't know what to.
Well, and that's kind of like a break or a transition into what the other things we want to talk about. We're going to talk about inflation. Last week we didn't meet up. I had some business and other things to do. So inflation has been a topic of conversation these last 2 weeks. Inflation isn't going away, and the conversation we've had on this show over and over again is like, where do I park my money? I mean, I would probably be the first on the side or somebody to tell you, do not just leave your money in a savings account, because that's not the best use of it. Money moves. Money is meant to move. It's not meant to sit. And with inflation, I mean, you're just losing money. Even though it sits in the account and still, I don't know, if you have like $10,000 sitting in an account and you still see at the end of every month 10,000, your purchasing power right now is just diminishing because of inflation. The secret tax.
Yeah, it's the hidden tax. Well, we were talking. Remember, we talked about the first time I was ever on your show, which I think was in March. It wasn't too long ago. We were talking about inflation and the kind of effect that maybe money printing could have, and it's just now kind of rearing its head. But yeah, so I don't know. It's kind of hard to say, like, okay, if you have money in the bank, it's losing. It is losing purchasing power. And if you use if you use all the metrics that they used when they originally came up with the CPI, then probably inflation somewhere around 14%. But the government is now saying that it's about 6%. But anyway, you see what it's doing when you go to fill up the gas and you go to eat, or you try to buy a house or rent. I mean, that's where it kind of shows its head. But you can also make mistakes too. This is the thing, like people say, you could say, okay, cash in your account is losing money. You should do something with it. And then people will say, oh, okay, well, crypto sounds great. Let me go on YouTube and see, oh, Shiba Inu, everybody's saying it's going to go to 1 cent. I'm going to buy that. I've seen that before. And that's not necessarily the best idea. I'd rather do cash than that. So, I mean, cash is not always bad. You have to I would recommend putting it into valuable things, which is why I recommend Bitcoin.
Or assets,
Or assets. Yeah, like during an inflationary environment, remember that the things that you want to buy are things that produce income. So real estate is one great example. If you have, and this is what I'm trying to when I talk to my mom. So my mom has a pension, but the pension is fixed. So she gets a certain amount every month, and that's great, and it's good to cover her expenses. But as time goes on, so 10 years from now, let's say you get like $1,000. 10 years from now, maybe that $1,000 can only buy you $500 worth of stuff. Yeah. So that fixed thing becomes depreciation, right? So you need to counter that with something that appreciates, and real estate is a great way to do that, because you can, let's say you get $1,000 a month today for rent, and then in 10 years, as that goes by, that the value of that property will double, and so will the amount that you can rent it for. So you will be able to rent it for $2,000. So real estate has been a great way. The second big one, I think, is commodities, which is kind of your thesis, is like, I'm going to buy gold and fixed assets.
Yeah.
So people can buy oil, they can buy lumber, they can buy gold, was the traditional. And for me, I think we talked about it before, is Bitcoin is kind of like, it's a mixture of gold, it's a store of value, but it's also kind of acts like real estate also. So that's why I tend to go a little bit more with the crypto side.
Yeah, and again, I'm more kind of the institutionalist. I kind of lean more towards a tangible thing. Again, I think it's really based on your comfort level. The thing with like Bitcoin is you can have like these tremendous swings and tremendous gains, where somebody like gold, like here, gold has been like 1,700 for like ever. And then in the last couple of weeks, it's hit above 1,800. Right now, it's sitting at about 1,846. And so that gives, I guess, credence that inflation is very present and people are moving towards those tangible assets more than like Bitcoin. Because I saw gold going up and then Bitcoin coming down this week. Obviously gold is selling again. And then my other stocks, like the mining stocks you told me to get rid of, which, I'm working on it. Those went up as well. So, I mean,
gold, the government just admitted that, inflation's a little bit high and might continue on for a little bit. So I think that you have the old traditional people that are like, oh, there's high inflation, I'll start buying some gold. So I think that, it will probably go up if there is continued inflation, just because it's the old tradition. But remember, it's thousands of years old. So the thing about Bitcoin, the reason it's a store of value is because it's a fixed number. So it's even harder asset than gold, because gold, they continually mine all the time. But like we said, mathematically, if something is debasing against a fixed asset, that asset will continue to go up. And the government's kind of painted themselves in a corner, because they've printed so much money, which has caused inflation. And normally in this kind of situations, you have to raise interest rates, but the U.S. owes so much money, and the cost to service that, they're not going to be able to do that very easily.
Yeah.
Without the economy not doing well, and if they don't continue to print and pump stuff like this infrastructure bill, there's going to be another $500 billion created of new money into the system. So it's all like, I don't know if you want to say smoke and mirrors. We're going to cut back on our bond purchases, but then now we pass an infrastructure bill, and here's a bunch more money,
which might cause more inflation. But I think that's the biggest concern.
Right, it could probably cause some inflation. A lot of time, like if you look at the big, like in the 40s, from a lot of spending, there was a decade of inflation, and also in the 70s. In the 70s, they were able to raise interest rates because we had a low amount of debt, but we have a lot of debt now, so that'll be difficult. And what they don't want is, they don't want stagflation, where they just cut everything off, and then the economy doesn't grow, because that would be even worse.
Yeah. And did you see Gabby's comment there? Did you see that pop
up? Okay, she says, so Gabby says, what about my
that's the wrong question to ask Henry.
What?
You'll go off on a tangent on that one.
Like Apple or Microsoft. Okay. Yeah, so that was the only one we didn't.
We'll go back to Apple real quick.
In an inflationary environment, you want to buy real estate, you want to buy commodities, which is so crypto. And then the other thing is stocks. And so then you have to ask yourself, well, which stocks are going to do the best? And whenever you have a high inflation environment, so let's say the inflation is at 14%, that's your hurdle rate. You need a company that's going to grow above that. So
yeah.
For me, I like to look at companies that are growing, look for companies that are growing greater than 50% a year. And then I do also own Apple and Microsoft. I haven't been buying them lately, but I bought them before.
Yeah,
so you want high growth stocks is the other. And for me, this was kind of nice. These last 2 weeks, you saw a lot of things dropping. And so when you have these dips, it'll kind of give you an idea, like, hey, what was dropping and what was not dropping.
Yeah.
The things that were not dropping that much, when people are selling, those are kind of the things. And basically all the things that weren't selling were the things that I'm trying to accumulate, which was like Tesla, Trade Desk. Actually, I bought Trade Desk not too long ago. But Nvidia.
Nvidia was good. Nvidia's been going up too.
Trade Desk, Shopify, Solana. These are in Square. Square is actually still at a pretty good price.
Well, that's the thing. The thing that people have to remember too is that you can't just go buy stocks and expect them to grow. You have to kind of have an understanding of how that stock is fluctuating. I mean, buying Apple right now, I don't know if it's the smartest thing to buy at this point until I actually see more of like our ports start opening up. I mean, they had a good earnings call back in the end of October. But I don't see a whole lot of movement, and I'm surprised even Tesla's doing well, especially in this environment where people aren't getting their supplies and there is a backup at the ports in order to get the products in order to make stuff. I don't know how next year's going to.
Tesla did a good job because they created. So there's a microchip shortage, but they created their own microchips. So they have a go around.
Apple's doing that too, by the way. Their M1s came out a couple weeks ago with their new laptops. So they're proprietary chips, and they're going to be essentially replacing all their chips. They're not going to be outsourcing anymore.
Yeah, I don't mind Apple and Microsoft. I mean, if you don't have any, then you can balance that with. So you want high growth, but you can buy a little bit of the stable stocks. I don't see anything wrong with it. But yeah, Apple just had a big run up because of a rumor that they were working on driverless cars, something like that. So,
Gabby's asking, do you recommend sites that are legit?
Sites like what?
I guess I'm assuming information. You're going to get information, and I see this all the time too. You go to YouTube, you watch the regular news channels. Everybody has an opinion. The thing that I think you have to do at the end of the day, Gabby, anybody watching this right now, is you have to learn for yourself, learn how these charts fluctuate, purchase, programs that actually teach you and coach you along. And I can actually send Gabby a link to the one I got, but be informed, and don't listen to the news. Really, the news is going to misdirect you wherever they're going to go. You may get, like Elon. I mean, look, Elon was like, hey, should I sell my Tesla stock? Putting it on Twitter. Should I sell my Tesla stock? And all of a sudden you see it tanking, the next day. And I think he's selling off some of his, taking profits probably. But if you go and you buy in at the $1,200 point and then it drops the next day, you're like, oh shit, I'm going to give this up. I'm not going to do it again. Because you were shafted. I mean, listening to news really doesn't help, but understanding how these charts work, and you can make a more informed decision on what to purchase, how to purchase, when to purchase, and or when to sell. All the things on top of that, but.
Well, I think like a lot of people just want to get into it. And when I first started trading and doing that kind of stuff, I didn't know a whole lot. I started reading books. Yeah. And I think I think you were here one time visiting, and I told you, I bought Hasbro. I think Hasbro was my first stock that I ever bought. And the reason was because they were going to come out with Star Wars toys and all this. And that was my logic behind it. Like, I didn't know, like, is the company making money? Is it not?
Yeah, me too.
But that's how you learn, and sometimes you'll make. So if you buy Hasbro and then it goes down, then you have to think like, I guess that wasn't a great idea. Let me read some more. I had things like Motley Fool that I used to subscribe to, and
the hard part is that each company, every news article or organization, they have their own agenda. You can watch political wise. You can watch news reports that are leaning one way politically or the other, and they're going to fill in whatever narrative you want. If you're going to want to buy like crypto and have no idea about it, you're going to find people who are saying, go buy Bitcoin. You're going to find people who say, go buy Solana. And they're all going to hype it up because they have an agenda. We all have, we have an agenda maybe. I don't know. I just want to share the information and let you know where my process is. And hopefully we all kumbaya together and we all help each other out in some way. Right, Henry?
Yeah.
Satoshi? But we're at the end of the show, so it's been 35 minutes. Can you believe it?
No.
Rambling on like a fool. But we're going to be here every Friday, sir. Is there anything else you wanted to say before we go?
I don't know. We said a lot.
I know.
We were just
we're mouth vomit today.
Congratulations. This is what you get in, and then what this will do is like it'll make you start following it. You'll probably want to read more about it and get you interested in investing, and that's what I encourage. Like, why not?
Yeah, and I think again, if there was a learning lesson for me, it's just use money that you're comfortable about losing or not going to worry about. And I think that's probably the biggest hesitation, especially getting in the first part of it. Like you'll go throw in a Hasbro. And I think my first purchase was Apple because it's like, hey, I heard that's a good company. I'll go throw money in there. And the first couple of weeks, it just went down. I'm like, oh shit, I made a mistake. But I didn't go sell it off right away. I kept holding on there and I kept wanting to learn more. And I had those shares and I actually sold them about a month ago. And I'm kicking myself now. Stuff happens, but be informed about it. Make those decisions. Be informed.
Well, that's why and you're only going to put in like you said, I'm just going to put in a few $100s. So if I make a mistake, it's not a big deal. But what it's going to do is kind of teach you, so that later on, hopefully, when it's $100,000, you're like, okay, I'm not going to make that mistake when I had that first $100. I mean, that's
what it's crazy too is like people want to sell when they lose it, and then people want to buy when it's the highest. Which is just crazy too. Like, oh my God, we had a run. I better go buy, and then at that point it just tops out, and then like, oh, I better sell it, and they're at the bottom. So crazy. So get over the emotions.
New investors is this, they
very emotional
when they see stuff falling. I see this all the time at work. When they see stuff falling, I'm like, hey, you should maybe grab a little bit, and it's like, nope, I don't want to go near it. It's going to keep crashing, and then they wait till it doubles, and then it's like, oh, is it a good time to buy it? And it's like, well, you should have maybe last month when I said it was falling would have been a better time. But but whatever. What are you gonna do? That's how you learn. That's how you learn and you reduce those emotional mistakes.
Absolutely. So we're here every Friday. Sacramento Satoshi, also known as Henry, or my brother, whatever you want. Rob Morales, RCO Network. We come here every Friday talking about money and the things that here to help you. So if you have any comments or questions, drop those in the comments section. We'll get back to them next week. If there's any topics that you want, if you want Satoshi's one-on-one time, he charges $49.95. I'm just kidding. He'll do it for free, actually.
I come in here for free every Friday.
But we'll catch you guys every Friday around the lunch hour. We'll try to make it early, but sometimes we don't. So just tune in. See you guys next week.